Hello and welcome to today's webinar. Thank you very much for joining us. The webinar is hosted by our friends at WNS Global and moderated by Finextra Research. I'm Gary Wright, I'm the head of research at Finextra. And again, I'd like to welcome to you today's session, the theme of which is hyperautomation. The next milestones towards complete digital transformation. And what do we mean by that? Well, we've got a panel of speakers I'll introduce you to more formally in a moment. And I'm going to moderate a session where we capture a lot of the issues and debate a lot of the issues around this whole topic. But what we're going to be looking at is the sort of pressures that the institutions in banking and financial services are under today when it comes to transforming and going digital, I think is the way of saying it. And particularly, how are the customers responding to that? We've seen a lot of development on the retail and the consumer side, but if we look at businesses and corporates, what's their expectations of a more digital industry in which they can do things better, smarter, faster? And how are the organizations that provide these services responding? What are some of the challenges that they have, which could be organizational, cultural, certainly through the technology, and how do they sort of rethink their business models? What is this issue around hyper-automation that we are wrestling with? And how does that all lead us towards more internal efficiencies, better ways of understanding customer expectations, and better ways of improving the value to a highly competitive market where the incumbents are challenged by new entrants, and maybe there's some partnerships that emerge from that as well. Now, in all of this, what we really do value is your contribution. So through the link that we provide to you, please, during the course of the session, ask a question, raise a comment, make a point, and we'll be watching out for them and hopefully cover them off during the course of the session. And the format is, I'm going to ask each of the speakers in turn to give us some high-level thoughts, some sort of contextual background to the topic that we're going to delve into in more detail as the session moves on. So let me start by introducing our speakers and thank them for their attendance today. Firstly, we have Jay Venkateswaran, who is the Business Unit Head, Banking and Financial Services at WNS Global. We have Paul James, who is part of Rabobank, product portfolio expert there at the bank. We have Nick Haslehurst, whose expertise is in financial services around payments and FX services. And we have Malin Lignell, who is on the digital and innovation front at Handelsbanken. So we've got a great spread of input and expertise and experience from the industry. And I'm going to call on them each now, as I say, to give a few opening remarks. And so let's hear from you all in order. And let me ask you to lead. Kick us off with some ideas and thoughts from your perspective on the topic. Nick.
Thank you, Gary. And thanks to the Finextra team in general for putting on today's session. I'll start my opening remarks by reflecting on the Khalifa review that came out last Friday in the UK on the health of fintech and talking about the UK Fintech Strategy. And the reason I raised that, it was a clear reminder to all of us how the UK and global markets generally are embracing the development of technology in financial services. And it does feel to me that we're now at a pivotal moment. You know, we're moving away from what was described in that report as fintech being, you know, silicon roundabout or laptop entrepreneurs, to increasingly now seeing every type of financial institution embracing and opening up to technology investment. And that's a marked change. You know, over the last 10 years, as fintech has grown as a concept and as an area of investment, it started predominantly in the retail consumer market. Many of the early fintechs were focused on increasing products and the propositions for retail consumers. And what we're now seeing is that market moving into the development and digitalizing of products for corporate consumers. And this accelerated investment has made it a core strategy for many of the well-known incumbent banks around the world to embrace as well. I certainly have seen banks investing in their platform, opening up their platforms, and perhaps a theme today will be that mix between collaboration of the banks with both the fintech and the big tech sector to create efficient solutions versus banks themselves taking propositions directly to market and providing improved, efficient solutions for their own corporate client bases. Most banks I see, Gary, are running a combination of those strategies. Collaboration is key, but also direct-to-consumer strategies are also key. But whatever strategy is decided on, that need for automating, integrating, and digitalizing is clear. The specialist fintech sector has done a good job of picking very niche and very bespoke product offerings and providing enhanced service and market proposition in those areas. But the banks are now also playing into the strategy of investing and embracing technology in order to maintain their market share and the profitability of their products. So in closing, I think the only thing I would also add is this development would not have been possible without some of the regulatory changes we've seen over the last 10 years, from PSD1 back in the day through PSD2 leading to open banking. These have all paved the way, certainly in Europe and further beyond that, into a sense of the financial community collaborating more. And certainly we're now at a pivotal moment for financial technology, and it'll be interesting to see how it evolves into this next phase.
Thanks, Nick. And the Khalifa review is quite timely, not just in terms of it's just been issued, publicized, but the aim to look at the fintech community from an independent viewpoint, i.e., I think it was recognized that fintech, including everybody now, not just the new entrants, is really beginning to mature and be more complex in one part, more sophisticated and more crucial towards a shift towards more digitalization of services to corporates. So we'll pick up on some of those points as we get into the deeper conversation that's going to follow. So thanks for that. And Jade, let me go to you for some comments on the topic. Jade.
Thank you so much, Gary. I think it might be interesting to maybe start off with how we define what hyperautomation is and what that really means, right? It seems to be one of these new buzzwords that's thrown about in the last few years or so. But for me, it's pretty simple. If you look at the life cycle of a transaction, digitizing that to the extent possible is just the simplest way to look at hyperautomation. How do you digitize that is the larger question and often the harder one to answer, right? If you are a traditional bank, where you're burdened with legacy systems, then, you take a certain approach to try and digitize as much of that as possible, as against a fintech company, which has the luxury of building many of those bits and pieces ground up in today's world with today's technology. So that gives them a different set of perspectives and an ability to build a digital-first product, which can, in some ways, provide a completely different experience to the corporate customer or the retail customer. So that's, a simplistic view of what hyperautomation is. If we step back, I think the other things to really consider here are really around the area of what customers are starting to expect, especially in the area of corporate banking. I think their experiences over the last few years in their personal lives in the retail banking space has, to a large extent, helped them define what their expectations are in the corporate banking world. That means, things happen instantly, things happen automatically, information is available, at the touch of a button. Those sort of expectations were never really present in the corporate banking world, but now are becoming par for the course, right? So as a banking provider, how do you respond to that? And that's really the biggest challenge that banks, as well as fintech companies, need to address right up front. And like I said earlier, there are clearly two divergent paths. Companies which are dealing with legacy systems respond to it a certain way. They think about it from a back office and a front office perspective, whereas I think the digital native companies, the fintech companies, have the luxury of responding to it in a completely different way by building a digital first product. And that, I think, kind of sets the tone for the new competitive world that we are in today.
Jay, thanks for that. And it's certainly worth that clarification, what we mean by hyper-automation. And certainly I'd like to come back to where we are with the incumbent banks, particularly because their journey might be more, shall we say, traumatic, but they're on it. And this session is around the next milestone. So let's have a conversation in a moment or two around how we push on from where they are to where they need to be. So thanks for your comments. And we also have Rabobank and Handelsbanken, two organizations heavily involved in the transformation of the industry. So, Paul, a few comments from you, Paul.
Yes, thank you, Gary. Yeah, I'm quite positive, even on that note that you just gave. As an incumbent bank, I think indeed it's a challenge. But I think as an incumbent bank, we can join forces with fintechs. So for me, it's all about opening up and exposing our services. Rabobank makes a strategic choice to do that. And we can combine and pair it with fintechs, and therefore make a much stronger contribution to the corporate customers. So they have a pain, they have a need for a full customer journey for that to be fulfilled. And I think there's a lot to be won there. I think it's always good to give a concrete example, otherwise it stays a bit theoretical. So just an example, credit management. You know, we as an incumbent bank, we provide the main debt collection rails. We have a direct debit system. So large corporations, they can collect the money easily. 98% is collected with ease. But it's the 1 or 2% where the pain is. It's when there's not sufficient funds, when there's issues. Now, until now, we as an incumbent big bank, we have not addressed that. So fintechs pop up and they get into that. But it's a fragmented journey. Now we are now teaming up with these kind of partnering with these kind of parties. And we're offering services to platforms, for instance, ERP, therefore giving the corporate bank or corporate company, a full solution or a fuller solution using hyper-automation, using AI, so the debt collection is done in a very intelligent way. And as an incumbent bank, you don't have to build all that stuff yourself, but you lean on the fintech who's specialized in that part. And it's quite an interesting combination when you bring that together. So you could save 10 to 50 FTE in a corporation if you don't have to do all the manual, tedious work of chasing that money. So less people. So there's a business case there. And Rabobank has reach in the marketplace. So it could be win-win for all. And also for the consumer that has to pay the bill, it can be nicer because they get a trigger to pay at the right time. So the end consumer wins, the corporate company wins, the fintech and the incumbent bank. So I think that's a strong direction to go for an incumbent bank, and we are on that journey.
Thank you.
So, over to you.
Yeah, wins for everybody there, which is the great end game. Probably some interesting stories to share about the journey along the way, but let's come back to those later on. And to close off this first session, Malin, over to you for some final comments. Malin.
Okay, thank you, Gary, and thank you for having me. I'm going to touch on a few points that we're going to hopefully cover today. But I mean, what we do and what we have been doing for a very long time is building these long-term relationships with our customers, and we've done that since 1871, basically, in terms of Handelsbanken. And historically, that has been made through this local presence, and of course, that is now moving into a new phase where more of this will be more digitally led and also nurtured and developed. And when customers get to evaluate us, we get awards for customer satisfaction, and as in Sweden, things like being the most empathetic bank as well as the most innovative bank. And that is really what matters, what the customers think about you, because in the end, they need to choose you over someone else, which is what it kind of boils down to. And one reason for that repeatedly high customer satisfaction is the model of high decentralization, where the customers meet someone in charge of making the decisions, which, I mean, requires trust in the individual. It requires governance through frameworks in a combination of a model without budgets and bonuses and a clear mission to put customers first. And that model in itself also kind of supports a constant adaptation to what used to be then the local circumstances and is now a surrounding world on a global scale. But it's kind of the same prerequisites that we are seeing moving into development as being agile, which is, I mean, it's a necessity and it's not a buzzword. And creating those circumstances and mindsets to adapt and find the how towards a common goal as well as being customer centric in doing that. And I think when talking about hyperautomation, I think you also need to be make sure that you do not lose valuable touch points in doing that, touch points with the customer if you come from the customer side. And I think it also kind of natural that our SME customers, they expect the same experience that they have in their personal financial relationship, which is in turn also affected of what you experience in other industries and what big techs offer and what other offering in terms of customer experience. And in terms of the SME or the corporate business, that is often intertwined also with the individual and the steps you want to take towards their vision, which is also kind of affected of their personal situation, whether or not you come down to the SME owners, balancing life choices or pure financial ones. Now, the team I specifically belong to, we explore more tech-driven innovation, which, and it absolutely does not mean that we do all of the kind of AI initiatives within the bank, but try and explore how to take that from a trend and moving that into production, which we have done in some successful cases, and mainly so far with a focus on internal processes, which is due to one of our focus areas coming back to building relationships, basically meaning that the focus is to make it possible for those to build relationships with the customers to actually spend the time in doing that and not spending that on doing different kinds of administrative tasks. And I think in exploring that, we tend to be before you go into more full automation and scaling that out in the organization. But we also have seen initiatives from other parts of the organization where we've developed an AI model together with scientists from Stockholm School of Economics, for example, where we use AI in text analysis to identify and understand how companies do not only produce and deliver their product in a sustainable way, but also if and how that actual product or service contributes to the SDG goals. And this is an example of a tool that also started internally, but has now quite recently been launched as a tool to the customers. So taking that, automating an internal process and making that easier is now a solution and a service to the customer with a direct value to the customer as well. So I tend to try and find these sweet spots where that internal automation and efficiency meets that human personal touch point with the customer and create value in that.
Okay, that's an interesting thing that I want to cover off there, Malin, the augmentation of human intelligence and experience with the automation of the technology. So I think, thank you everybody for that opening session. We've covered a lot of ground, and I want to go back to some of those points and certainly build on them. The point where I'm sort of coming from is this is not the first step on the way to digitalization, as we say in the theme of the webinar, but it's an important next step. So thank you for the questions that are coming in. Please continue to send them in by the link provided. And Jay, can I come back to you as we go into a deeper conversation around the whole thing? So Jay, there's no question that the industry is changing. We've seen it. There's regulatory pressure from new entrants, the central banks and bodies and groups, and obviously customers, particularly the corporates, are asking for something different. And banks are embracing technology and digitalization to offer new solutions. But many of them, going back to your point, and just starting with the incumbents, are still saddled with this core banking platform. And I just wonder, how are they coming out of that? How are you seeing the state of play? How do they push on? And I want to leave that with you to answer, but let me just put the first question that came into that question, and that is, it's okay because they've gone for the low-hanging fruit, but how are they going to get to the real complex stuff? Jay, over to you.
It's a very interesting discussion, and let me pick up from where Malin left off. I certainly do believe that traditional banks have a very unique advantage in being able to build deep relationships, in understanding their clients and tailoring their service offerings to the needs of specific clients, to the needs of specific segments. And they can do that far better than, say, a fintech who's trying to do something, in a more standardized, in a more large-scale manner, right? So that's certainly a unique value proposition. But I think going back to the core question, right? How do you think about hyperautomation in the context of all that is happening today? I think there are 2 or 3 perspectives that we're seeing from our clients, right? And in discussions with our clients. One is traditionally over the last 8 or 10 years, the thinking was always back office driven, right? It was always RPA, AI solutions for the back office. How do I fix a piece of the core banking platform that's not quite working for me, that's slowing things down for me in a particular process? And, I think about this as a Band-Aid, right? We're putting a Band-Aid on a broken piece of the core banking ecosystem to try and make things a little bit better, a little bit faster. That was traditionally how I think people thought about automation. But I think over the last 18 months, and particularly with the pandemic over the last 12 months, with digitization having been accelerated, I think the thinking has certainly shifted. And it's shifted towards a more holistic perspective of, if I am doing business for a particular set of clients, say a bunch of corporate clients, a segment of clients, what is their experience? What are their expectations? And how do I solve those problems? If you always look at it, by putting the customer at the front of the line, then you come up with a different set of solutions. It's not always RPA and AI to the help. They don't solve all problems in life, unlike how people would think traditionally. I think it's a combination of 4 or 5 different tools that banks are using very effectively over the last few years, right? The first thing, like I said, is to think holistically about an entire flow of transactions from the customer's perspective. The second piece is to really think about, what are the touch points the customer sees in that transaction? And how do I make that process easier, make it more accessible, make data more easily available to the customer? And a lot of the solutions lie in areas beyond what was traditionally addressed by RPA and AI. They lie in industry-specific software tools and solutions that sometimes traditional service providers have come up with, sometimes startups have come up with. If you look at the corporate lending world, The way, say, a Moody's has developed its product offering has been fantastic, and really played a big role in the ability of a bank to review and authorize a loan for a corporate customer. The way someone like an Encino is a fast-growing company with a bit more focus on the U.S. market. But what they've tried to do is they've tried to analyze all the pitfalls in the corporate banking relationship, in the corporate lending process, and they've tried to build a cloud-based solution that's digital native, that addresses all of those problems upfront, so that it compensates for the drawbacks that may exist in your core banking platforms or in your core processes. So adopting these sort of best-in-class technologies, combining them with RPA and AI in the back end of your operation, combining them with better processes and more customer focused solutions, that's the holy grail, right? That's what everyone's looking to. They're looking to that, that beautiful combination of people, process, and technology, as well as built-for-purpose solutions, right? The built-for-purpose solutions really where I think the future is. It's companies like Encino, it's companies like Moody's who can create, who can build a whole business focused on solving one problem, right? And as you adopt those solutions into your core ecosystem, then you begin to solve these problems faster. And that combined with, the point that Malin made earlier about the ability to establish relationships with customers, that's the holy grail, right? And that's really what's going to keep the traditional banks in business. It's going to make sure that they protect their market share.
So Jay, let me pick up on that and move swiftly into a conversation with you, Paul, because clearly we've heard some of the points that Jay's quite rightly drawn out as being the challenges, and some banks have to be quite brave in recognizing it's a shift to get to that point. Rabobank, long-established bank, you've been embarking on a transformation program for some time, and you said that in your opening remarks, it is about an ecosystem, it is about partnerships. So just picking up on some of the points that Jay raised there, how have you actually gone about it yourself, and recognizing that it's people as well as processes developed a solution to transform the bank from the inside out? Paul. Okay, I think we must just have lost Paul there for a moment. So let me just pick up on that point, right? But change it around, and I'll come back to Paul when he returns. Nick, let me go straight to you, okay? Again, picking up on the point that Jay raised there, because there's a theme to all of this. We've got to move away from these intensive pressures that banks are under, and they've got a whole heap of siloed structures and manual processes and past traditions, okay? And in a world that's encouraging open banking, competition, and new ways of doing things, they need to radically rethink the service to customers. And there's a lot of gloss around this, but how much substance are you seeing with the industry really getting to grips with this theme of hyper-automation and really challenging things with different models? And particularly, again, one of the questions that cropped up there is data is increasingly important. You've got to think of new ways of providing some value. So Nick, let's go to you before I come back to Paul for a response to that.
Yeah, okay. I mean, I think firstly, we all recognise there is a long, long way to go, but we also recognise that there's a massive amount of work that's already been done. And I echo Jay's comment that the pandemic in many ways has accelerated this. And I'll give you one tangible example. As someone who's opened, thousands of bank accounts with many banks around the world, and much of that paperwork, still having to have sort of wet ink signatures on it. When we all started working from home from whether it was the middle of February or the middle of March, depending where you are in the world, there was a 2 or 3 week inflection process of everyone going, oh my God, what are we going to do? I was, joking aside, having to sign forms and, send my kids down to the local post office to post them off to banks in Hong Kong and various other jurisdictions. But very quickly, things like, DocuSign and various other equivalents became, within a month, commonplace. And I'm sure that's something that's here to stay. And whilst that isn't hyper-automation in its own sense, for the bank's internal process, if you think of the speed of getting 2 or 3 directors in an organization to sign a piece of paper, get it posted back, get it processed in a bank, suddenly something that would traditionally take perhaps 10 working days went down to maybe 1 or 2. And I've seen that across the value set. Now, that said, this is a very small example, clearly, and there is an enormous amount still to do. But I think the pandemic has forced us, because of the situation we're in, and made us do some of these things. But yes, it is a surprise to some of us where you've got a deep relationship with a financial institution, that when you want to open and launch new products with that same institution, the difficulty you sometimes have to go through, which you wouldn't expect in your personal life. But that is moving apace. I'm certainly seeing banks breaking down those processes, finding ways essentially of integrating their different products internally, so that when they come to face you as a consumer, you're not dealing with one different area of the business for FX options, one different area of the business for overnight investing, and that's where banks have got to really integrate internally, so that when they come out to us as a corporate, we can have one relationship, one set of protocols, and whether that's from a security perspective or a data perspective, that's really important. The second theme, I think, Gary, that I'm seeing is, instant payments around the world and moving money, and how the automation of that concept, that it takes 1, 2 or 3 days to move money because of the manual steps in that process, from screening the transaction, reconciling the transaction, doing the security protocols around the transaction, need to take that long. They clearly don't. And there is an enormous efficiency in the entire, corporate world for us to really have more of an instant view of our liquidity, particularly when I think about cross-border liquidity, to have a more efficient way of manage our internal resources, because suddenly we've got visibility, we've got the ability to move money instantly. You don't have to leave money in different countries or pay bills 2 or 3 days in advance. And that's not what we expect as a consumer. As you guys all know, when your son, your daughter, or whoever comes and asks you for, an extra £10 or $10 in their bank account, they expect you to put that there for them, within minutes, not a 2 or 3 day process. And in the corporate world, we've been slow to catch up on that. And in fact, some were a little bit skeptical, I would say, that instant payments had any value to corporate treasurers. But what I'm seeing is a lot of efficiency now come through companies managing their liquidity and managing their capital base, because they've got far more visibility and far more access to their funds. So that's a couple of themes I'm seeing. And then I think the third part for me, and the last part before I hand over to Paul, would be, that piece between collaboration and launching products on your own, under your own brand name, doesn't have to be a binary choice. I'm seeing many financial institutions doing both. So whether that's Goldman Sachs launching their own wealth platform, but also giving access to their wealth platform for many other aggregators, money managers, wealth managers online. And I think there is a theme there which perhaps 20 or 30 years ago, that collaboration wouldn't have existed. But the world of open banking and APIs and partnership and collaboration has allowed people to think perhaps a little bit more openly. And I think certainly that's what you mentioned in terms of your strategy, Paul, a little bit earlier. And I think that's a theme you'll see across lots of different industry sectors, which historically wouldn't have done that.
Nick, thanks for that. And just a supplementary point to that, because both Malin and Jay picked up on the sort of the need to smarten up the way that we look after the corporates. And there's lots of business processing, re-engineering, there's lots of agile methodologies, and there's lots of tech. One of the questions that pops in, doesn't it have to happen faster, smarter? Isn't there such a sort of long drag towards the way the corporates are being serviced by the banks that they're under threat unless they can do that from others? Nick?
Yeah, no, I think that's right. I mean, corporate banking can be a very profitable sector, and for the banks to maintain their market share, clearly there is a need to keep up with other services that the fintechs are developing. I think the fintechs themselves, in many instances, clearly don't have the brand and the customer relationships and the volume of customers all the time to be able to run a scale business, and that's where that collaboration really comes. But I think people are focused on the more obvious areas, the high volume areas of, cash management, transaction banking. There are some areas which are more heavy lifting, whether it's FX options or bond issuance, which still, have got a long way to go. But, I think there's a piecemeal journey here that does have to happen a little bit piecemeal. Whether it's happening fast enough, is a point of view I'll let everyone reflect on. But I think certainly the fintech investment in rebuilding some of these services is forcing the banks to become supportive. But at the higher end of, some of those products I just mentioned, like FX options and bond issuance, it's still a very manual process as a corporate when you want to access those services.
Thanks, Nick. I think there's often a sort of feeling of a certain malaise with regard to banks looking after corporates, because the upheaval and the transformation we've seen in the retail consumer section isn't there. So therefore, the dynamics are very different. And I'm sure, Jay, you'll have a view on that, which I want to come back to. But Paul, I was picking up on the point before that Jay raised at the outset, that this is a lot about people and processes, and getting to the point where you're on a digital journey that started some time back in terms of transformation, and you've embraced the fact that there is a new world of third-party providers of best-in-breed services. So there's a way that you've gone down the route of picking them. So I suppose my view is that you've kind of taken an inside-out look at the bank. What do you want to do? Where do you want to go? How do you get there? So how have you approached some of these cultural changes, organizational changes, and behavioral changes to really shift the bank along? Paul?
Yeah, or you could say it's an outside-in look, right? Considering that we want to be where the customer needs us to be, instead of getting the customer over to us. But I understand your point. Indeed, inside out, we're making a change. We're opening up the doors. And it's been really a bit of a search between banking as a platform and what we call banking as a service. So we have our own platform, and we would like customers to come to our platforms to do business, right? To have the primary relationship. But when we open up, we empower other platforms and other parties, ERP, etc., e-commerce, and they get more of the primary relationship. And I think it's a good thing that we as Rabobank made a strategic choice to actually go for both. I think you have to actually, as my personal opinion, if you only bet for your own platform, I think that's risky business. I think you have to open up open banking and beyond. In that sense, I think it's very important, and it also leverages the power of the other parties. So I think it's good to mention at first that we made a strategic choice, a deliberate choice to do both. So we're not afraid to be where the customer wants us to be, or to open up and offer the services. Yeah, but it doesn't go by itself, because the whole organization is geared towards making great platforms, right? The people are familiar with that. So now they have to switch. If you're into product, your feature now can go outside in a commercial way. So you're more of an entrepreneur if you're a product manager or product owner, right? But this requires a very different way of thinking. And it also means the way you spend time, instead of spending the time more internally, you much more have to go out there to get a feel for the market. What are the needs, the pains, and what partners are out there, right? And what is the willingness to pay for a product, etc. It's a totally different ball game. And besides that, we also have to set up different product administration, billing, administrative processes. Normally they're geared towards the primary relationship in the platform, and all of a sudden we have all kinds of different relationships that the incumbent bank is not used to. So we're in the middle of that change and setting that up. Yeah, so how do we go about it? Yeah, I think it's both bottom up and top down. Top down when it comes to KPI setting. So we have banking as a service KPIs, they're coming more and more and more. So that's important. Another one is the governance. How do you do the banking as a service, the open banking and beyond business? Who does what? Who's responsible? So we're ironing it out. It's a step-by-step approach. We're doing a lot of evangelization internally and awareness sessions to explain, especially to the product folks, about the opportunities that banking as a service offers, opening up, doing equip sessions. We set up a banking as a service center of excellence. So we're collecting knowledge, papers, articles, market research, templates, go-to-market templates. So we're reusing the learnings and the knowledge also of previous business journeys and setting up these administrative processes. So a lot of this is going on. It doesn't happen overnight, but it's definitely a very exciting journey to be on. And
so Paul, let me pick up on that, and I want to go to Malin because you've got a similar view. But Jay, can I just come back to you? Because one of the things that crops up here for a brief response here is how do you balance all these things out? Because on the one hand, you're trying to automate and improve internal efficiencies. You've got to work smarter for AML, for all the purposes of governance and compliance. At the same time, you've also got to look at how you are more agile in your lead time to market, working with third parties. It just seems to me a constant kind of dashboard of different events happening, maybe not all complementary. Jay, your view on that?
Well, I think, we've spent a lot of time with many of our clients helping them build these sort of transformation roadmaps, right? A transformation roadmap tries to take a holistic view of your environment, your internal ecosystem, your customer expectations, and put all of that together in one plan, right? With a clear roadmap of what your priorities are, how you will get there, so on and so forth. But this is not a one-time exercise. It's a living, breathing process which needs to be revisited every few months, every year, and revitalized because the environment is changing, competitors are changing, fintechs are challenging you in certain ways, your competitors are doing something different, technology is providing you new capabilities which you probably didn't have access to yesterday. So, you've got to be able to consider all of that and dynamically manage this transformation roadmap that really sets you up to be successful. And banks that execute well will continue to gain market share. Banks that don't will lose that market share. Right? It's just as simple as that.
Okay, so let me Malin bring you in here because if I clumsily talk about Rabobank because the question was phrased as a sort of inside-out view, right? Which I know it's much more than that, and then you started off by talking around the sort of customer-centric point. So let's call that an outside-in point of view. I'm really interested in how you sort of understand those customer needs and how you're responding to them as a bank, how you sort of bringing it all together, working with the fintechs to create that value to retain those customers, or to use your phrase, make them choose you. So what's your thoughts on the topic from your point of view, Malin?
I think I have many thoughts. I just need to sort them out. But I mean, first, I on a high level, I mean, banks and financial services, we've been in kind of a change from digitalization digitizing to digitalization, now moving into more what you would call a more transformational phase. And I think, to be honest, I mean, banks overall, we need to recognize that there is still very, very much of that which you can do if you look at the broad variety of services that you can access when going physically into a branch or talking to someone at the branch, even if it's made of a phone, and actually making that accessible, which is not really transformation; it's more of a digitalization effort. So I think, there is a journey to be made there for all the banks in general, and as I think Jay mentioned, we also have a broad variety of different kinds of initiatives ongoing, from in the development, automated testing, in mortgage applications handling in the Netherlands, in process optimizing, in AML issues, etc., 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 and moving that. And I think Jay touched on a very vital part, that to be able to actually do something that means transformation and not just digitalization, it is absolutely vital that you take that holistic view. And for me, it's then easy to go to the customer, view, and that means actually being really good at understanding that customer journey, where it starts, where it ends, and if you take any process, it normally does not start with the actual financial services. It starts some way before that. And I think, we are seeing in the market, of course, all these new entrants. We're seeing big techs disrupting, and we're seeing all these easier ways of sharing data, etc. So a lot, a lot around it is saying that we are moving into this new phase. But I also kind of need, and this is my personal view, but I'm still kind of searching for these really transformative new customer journeys and new products and services. I feel that we are seeing a lot of features in the market, but that really transformative, I think, is kind of still yet to come in many aspects. And I know that when we spoke a little bit before this webinar, I talked about, and I referred to something called the UX hierarchy of needs. I don't know if you're aware of that, but it's basically a model for saying that if you need to take that customer holistic view in a process or in an experience, you need to be at least 3 levels. Of course, you need to meet the customer needs. That's the basics. That's what you need to do to actually exist in the market over time. And as I said, in general, banks still have a lot of work left to do in just making that variety of services at the branches available and accessible in digital meeting places. And then, of course, you need to make things easier for the customers. That is what you need to do to compete. And that also includes that holistic view on your internal processes to actually transform them and not just moving them from one place or another or sub-optimizing various parts of that journey. And we talk about a lot about corporates today and SME customers. I would say that there you have examples of, for Handelsbanken, for instance, we teamed up with an ERP vendor called Fortnox, where we integrated that ERP system into business services and online banking for Swedish SME customers, and customers can access a broad variety of ERP systems through integration that basically provides them with an automatic connection of payment and account information between the customer's business system and the bank integration system. So you have a fully digitalized, automated flow. That's making things easier. That's making it possible for customers to focus on what's important for them. and you need that in order to compete. But you also really need to take that third step, which is making those brand-specific choices on how you're actually going to come out as a winner in the end, and that's those brand-specific choices you need to make. And for me, that kind of goes around a number of things or views. One being that digital is not a standalone. You need to, in talking about a customer experience, it's a part of a customer experience. And I know there's an interesting use case. I think it was from a car manufacturer that they automated the full process when customers went and left. You come with your car, you leave it for that yearly checkup, and they automated that entire flow. And the customer satisfaction actually went down. Even though it was easier, it was much more convenient, customers could just go to that store, leave their key, leave their car, pick them up later. But they needed to go back. They needed to add that call from someone at the company, just to call and say, hey, I know you had your car in for a checkup. I just wanted to make sure that you're satisfied, or if you have any questions. And then doing that, they saw the customer satisfaction rocket. So for me, it's really having all these parts of that puzzle to work together and to interact together. And doing that is a complex material, because customers, whether or not you're talking about individuals, we're talking about corporates, and as we earlier said, those two are also definitely intertwined. They are individuals with totally different logics for how to do things, where to start, when I want to talk to someone, when I don't want to talk to someone, do I want to share my data, do I not want to share my data, and what they want in return. And even though there are a kind of large chunks of customer groups that match all of these different individual choices, you need to have also some kind of individual adaptation in that process when you go customer face. And there's a really interesting use case also of study research from Harvard Business School. And please look it up if you haven't read it already. But they actually found out that just adding a button in a fully digitalized flow with regards to mortgage application, just adding a button saying, would you like to talk to someone, actually increased the conversion rate of that mortgage applications, even though very few customers actually pushed that button. Very few actually wanted to talk to someone, but still they felt more comfortable, more with their choices, more safe, more secure, and they actual pushed the button to send in the mortgage application more often than when they did not have that button there. So it's all about getting these pieces together. And I think to compete in this market, going back to having a holistic view, I think you need to start by saying that a digital mortgage, to be honest, will not be competitive. It will be a necessity. But that one who really recognizes that what customers are looking for is that first home where they can start a family or moving to a new job or whatever. That's the journey they're on, and that's the journey you need to fit into. Or for that reason, if it's a corporate.
Marlin, can I pick up on that? Because we are really coming towards the end of a conversation that has flowed very smoothly. No, that's fine. I just want to pick up on the last few minutes. So one point I go back to you on, Nick, just for a brief response and picking up on what Malin is saying there. If we go back to the corporates, and one of the points that cropped up here was recognizing cash flow and liquidity is huge to any business of any size. Are they ready for what they have to do to embrace the change in all of this? Because it isn't just the banks offering something different. Particularly if you're looking around some areas, they also have to adapt and change. So to what extent, briefly if you will, you think that the market is sufficiently educated to understand that their commitment to making a change brings a significant overall contribution to how they run their business. Just an observation, Nick.
Yeah, it's a very, very good point, Gary. And, the market is at different stages. I think what's happening is some of the other fintech providers are highlighting these issues through their integration. So whether it's platforms like Xero and QuickBooks, who can now integrate into your bank, and they'll bring a service proposition to that SME sector and mid-cap sector that didn't used to exist. So I think what you've got is, you've got pressure on the banks to innovate because there's certain fintech specialists becoming really good at different disciplines in financial services and really digitalizing them. And then you've got technology platforms who are also wanting to integrate into finance sector. So when you implement your new ERP system or your new general ledger system, certain banks are already integrated into that system. And actually, you're more likely to end up working with those financial institutions as opposed to a financial institution that isn't integrated. So, undoubtedly, there's a mixed bag out there from the companies and the corporates who have always done it this way, and this is the way it gets done, versus a new breed of corporates who just expect corporate banking to be very similar to retail banking, where we all know we can get our balance, any minute of the day, 24/7. We can pay anyone when we want, 24/7. And that's a service proposition that historically hasn't really sat in the corporate space. The protocol of getting a statement once a day, if you're lucky, for all of your accounts around the world has been that theme. So a lot to change.
Okay, and we really are coming to the end. So Jay, I'd like to go back to you because you'll have a few comments. The theme really was the next milestone towards the whole business of the complete digital transformation. So there's a bit of me that says, how do you think we're doing? But here's an unfair question for you. So one that's come in. If you go back a period of time, let's just take 2 or 3 years, you've seen the engagement with the fintech and the growth of the fintech sort of being of a certain level, and now you've seen it grow significantly. So the unfair question, just to try and get a mirror from you, is to what extent now, in maybe call it in percentage terms, you now think that the banks are truly embracing fintech? It may have been 5% before. Is it 20, 25%? How have you seen that shift and change as a result of getting towards a true digital transformation, particularly some of these incumbents that deal with legacy? Okay.
Well, I think the answer to that question is all over the spectrum, right? Every bank, every country, every market has a slightly different answer. Some banks have holistically embraced the fintech revolution, have found the right partners, have found the right sort of points of integration with these new technologies, with these new platforms, and have made it work. Others have innovated in-house. And, you look at what someone like a Goldman Sachs has done. They've started a whole new, fintech within a traditional financial institution, right? So that's a different approach, one might look at. And, yet another bunch of banks have done a really good job of taking those best of breed technologies that fintechs are developing and then bringing those in-house and making the best of them in-house. And then there's the fourth group, which are lagging behind. And that's the group which I worry about most, because that's the group that's going to get left behind at some point. But I think to a large extent, this is the conversation that's front and center in any bank, in any management team, in any boardroom within the financial community. And banks have responded to it in all sorts of ways. And most of them have done it from the perspective of their customer segments and what serves their customer segments in the best possible way. And that's always the right answer, right? Because the first thing you want to do is protect your customer base and grow it. So as long as you do that, everything else will fall in place. Right?
Jay, thank you for that. And I think, the response there, which is the difference, I think, between a while back and now, is the bank's response to actually the fact that they've got to change, and now there are smart ways, both in terms of methodology, technology, and partnerships that can actually do that. And you can't not do it. You can't ignore it. It's just how successful are you going to be in getting to your strategic aims. So look, we really are coming to the end. I hope that everybody agrees we've kind of exhausted the topic as far as we can, given the time we've got. We've looked at it from where are we today to where might we be, and what's the journey and challenges along the way for banks, and what's the focus for customers, and what's the role of fintech as we move forward. So Jay, Malin, Paul, Nick, I'd like to thank you for your contribution today. I'd like to thank everybody that's joined us. I'd like to thank you for your questions. And I'm going to sign off the webinar now. Thank you again for joining us, and do enjoy the rest of your day. Thank you very much indeed.
Thank you.